14% annualized return is the average our lenders have earned with us while being in first lien position to known or referred borrowers. Let's dive into this. What's up, y'all? My name is Jay Helms. I'm founder of the W2 Capitalist community and co-founder of W2 Cap Capital. And you're watching this video because you have money, and money can be cash, a 401k, an IRA, or just a cash value in your life insurance policy. And you want that cash to go to work. Putting your cash to work means that you want that cash to earn a higher interest rate, higher than what you're earning right now. And these four things are happening simultaneously. Number one, you're being secured in first lien position on a piece of real estate. Number two, you're lending on short-term basis. So think of that 2 to 12 months. Three, you're lending to known or referred borrowers. And number four, you're having the loan serviced by us at W2 Cap Capital so that your lending is extremely passive. And so if that's you, let's talk about the track record we have here at W2 Cap Capital. So for this slide and for the rest of the presentation, the numbers I'm going to share with you happen over the same time period. September 1st, 2022, when we originated our very first loan, until December 31st, 2024. And during that time period, we originated over $8.3 million in origination across 48 different deals. And just to break that down in a little bit more further granularity, so in 2022, those few months there toward the end of the year, we originated $1.28 million in loans. All of 2023 made up $3.36 million, and then all of 2024 made up $3.73 million. Which, by the way, we are not accepting every application that comes in. As a matter of fact, since that very first loan in 22, we have received over 470 applications that we rejected or denied because those loans did not meet our guidelines. And so here is a breakdown, historical month-by-month breakdown of the interest-only payments that go directly to our lenders. Now, this does not include the origination fees. This graph only shows the monthly payments and the extensions if awarded. I'm going to talk about extensions here in just a little bit. And in 2025, we're shaping up to be pretty good. I'm recording this here in February, and January and February are at the top of the record books as far as a monthly interest-only payment to our lenders is concerned. And so with that, let's talk about some averages. So our average deal is $174,000. That is purchase plus rehab. Now, quick side note on the rehab funds are not distributed at closing. They are going to be held into an escrow account, and they're going to be released on a draw basis. But the borrower does pay interest on the entire balance of the loan, not just what is outstanding. Okay. And so just to go through this slide with you, average loan length, 6.7 months. We were ready to close in 10 days. Average interest rate was 12% on the loan. Average annualized return for our investors with origination and all the other fees is around 14%. And so our largest loan that we originated today is $506,000. Our smallest was $30,000. Average time to close after, even though we were ready in 10 days, our average time to close, waiting on title and everything, was 26 days. And this is probably my favorite slide of the deck, and that's the highlights, right? So we had 0 defaults and foreclosures. We had 5 loans that were extended. Again, I'll talk about extensions here in just a minute. We had 0 payments missed out of the 48 loans that we've originated so far. And the number of payments that were delayed, there was 2. And those 2 came from a clerical administrative error. Totally my fault, but we got them paid very quickly after that. And so one of the things, 2 things that we get asked a lot from potential new lenders is, how are you going to secure my capital and how can you provide these predictable returns, right? And so when you lend with us, your money is safe and it is secure and your returns are predictable. So let me break this down let me break both of those down for you real quick. Here's how your capital is secured. Our underwriting guidelines, we lend at no more than 70% of the properties after repair value and 90% of the total project cost, right? Before closing, and let's just say you've gone through the process, I'm going to review the entire process here in just a minute. Before you've raised your hand, you said, hey, I want to be part of this deal, you're going to wire your money to our attorney's escrow account. And that way we're in charge or in control before things get dispersed, because our attorney is going to hold on to your funds until we've received those signed versions of all the legal mortgage documents. We've got a couple of our own documents sprinkled in there that we need to make sure they're signed. And so when that happens and our attorney verifies that everything's been signed like we like it, then they will release those funds to title, and title can do their disbursement, right? Speaking of rehab funds, if your project that you're involved in does have refunds set aside, I mentioned this a little bit earlier, but we're going to hold those funds in an escrow account, and we're only going to release those once we can verify that not only that work is 100% complete on the project, but also it was supposed to be part of the project. Meaning when the borrower submits their paperwork prior to closing, they provide us with a fully detailed statement of work on our template. And as they are submitting their draw request, we're marking those things off of their statement of work saying, yep, you accomplished this. We can see the pictures. We can see the invoices. We'll reimburse you for that, right? The other thing that we believe helps keep your money safe is we're only lending to known or referred borrowers, meaning that these are members of the W2 Capitalist community, or there's somebody that my partner Gwaith, who I'll introduce you to in just a minute, we know through our investing channels because we've both been investing at least for 10 years and we've amassed this entire network of potential borrowers. There is a caveat to this. There is a little asterisk here. Out of the 48 deals, we have closed one deal that came strictly through some off-market or external channels, marketing channels that we were experimenting with. And so we have closed 47 out of the 48 have come from known or referred borrowers. And the last thing I'll mention here is not only do you get copies, electronic copies of these signed documents, once the title company takes them to the county and they get the official stamp as being recorded, which is the significant part, right? So that verifies that you're in first lien position. You also get a copy of that stamped document that puts you in first lien position. So let's move on to how returns are predictable. So in the initial offering, we will send out a blast email to our lender distribution list, and that gives opportunity to potential lenders to raise their hand and say, yes, I want to be part of this. And before you say yes to a deal, you get to see all the juicy details. You get to see the pedigree information about the deal, about the borrower. And for clarity, we fully review every deal. We'll underwrite it. We'll talk to the borrower. And then we issue them a term sheet before we ever bring it to you. So we're going to issue them a term sheet. That's when it kicks us in the direction to go and find a lender. And so once you fund the loan, here's where this gets predictable, right? Because when you get to see all the pedigree information, you get to see the interest rate and everything, right? And then once you fund the loan, here's something that happens every month while we're servicing it, right? So, and I'm going to say on or about because in these dates, they can fall on a holiday or on a weekend. So it just translates to the next business day, right? So on or about the first of every month, we would draw the borrower's payment from their account via ACH debit. And then on or about the 10th, we hold on to it for at least a week just to make sure there's no chargebacks or any errors that could delay payments. And so on or about the 10th, we're then going to ACH credit that to your bank account, right? And then on around the 15th, we're going to send you a statement showing your earnings to date for that project and anything that could be reflected in your escrow balance if your project has rehab, right? All right, so here's how this works. Here's how our lenders make money. They make money in three different ways. Number one is origination and closing. This is typically 1 point, but it's origination and closing. Number two is the monthly interest-only payments that come directly to you. And the third one is through extension fees, if those are applicable. So let me touch base on extension fees for just a moment. So extensions are baked into every mortgage document that we have as an option, right? And that option is totally at your discretion as the lender. Now, we will give you some guidance on whether you should or should not. There's typically signs of what makes a good borrower and, are they being clear and very consistent with their communication. But here's what you get if you decide to extend that loan. Number one is you get a 1 point extension fee. That extension is only for 3 months, right? And so for that additional 3 months, not only do you get a 1 point extension fee to extend the money, you also get interest-only payments for those additional 3 months. So basically you get 4 payments for 3 months, for 3 additional months is how that works. Another question that we get often is, how does W2 Cap Capital make money? And so we also make the money in three different ways, all paid for by the borrower. This happens to be origination at closing. If we're servicing your loan just to help keep our interest aligned, we keep the delta above our service agreement with you, meaning that any amount of the mortgage that's over your service agreement rate, we're going to keep. Right. And so, for example, if a borrower is paying 13% on the mortgage, our servicing agreement with you states you're going to receive a minimum of 12%. We at W2 Cap Capital, we're going to keep that 1% delta. Right. And the third way that we make money is through the construction draw process. Each time the borrower goes through to request a construction draw, there are resources that we deploy to make sure that what they're telling us and what they're requesting is verified, not only from their original statement of work, but actually verified that got it installed at your project. And so to cover our resources for that, the borrower is going to pay a construction draw fee to make that process happen. So if you want to look at this as a timeline, so deal presentation, capital commitment, deal funded happen when those averages of 10 to 26 days that I talked about earlier. And so you fund the deal, and then we service the deal for you for those monthly interest only payments, providing you those monthly reports. And then after that average 6.7 months has gone by, your capital is returned, for example, right? That's what an example deal looks like. And then you are ready for us to find you their next opportunity. Again, on funding the deal, we're going to introduce you to our attorney who creates all of our mortgage statements or all of our mortgage documents, and you will be wiring your money to him and his team. That way they can hold on to it until we receive all the documents that we need to see. Make sure that title has done their job, right? And so a very popular question that we receive is which states do we lend into? The answer to that is we lend in 33 states. The ones that are highlighted here in blue and green are the ones that we are able to lend in. Out of the 48 loans that we've originated so far, those are the 10 states that are highlighted in green. The states in white either have unfavorable foreclosure laws that we don't want to expose ourselves or our lenders to, or they require some sort of licensing that W2 Cap Capital does not possess yet. I want to touch on how your money is protected once again. Number one, only lend in first lien position scenarios on projects that meet our underwriting requirements, meaning that they hit that 70% loan to value, 90% loan to cost. If both of these guidelines, if one of these guidelines is missed, we're going to ask the borrower to put a larger down payment down to bring those numbers back within our guidelines. We also, kind of going through the rest of the slide here, we're lending in states that are foreclosure friendly and borrowers are known or referred. Again, there's that one asterisk there for the deal that we closed due to some marketing efforts. The types of assets we fund, there's 1 to 4 unit properties. Typically, these are going to be BRRRRs or flips. If you're not familiar with the BRRRR acronym, that is they're buying it, they're rehabbing it, renting it out, repeating the process, refinancing, and then repeating the process. Basically, these are properties that traditional banks don't want to touch due to their condition. And so they are getting the short-term loans with us to turn them into stabilized rentals, and so that they can then lean on longer term debt with much better terms, right? We've also done some mixed use, smaller commercial multifamily, and some mobile home parks, and some new construction. New construction loans are a little bit different than anything I've presented up until this point, but I just wanted to highlight it here in case that is of interest. We can discuss what that looks like. All right, 2 more things, and then we're talking about next steps. Number 1, again, my name is Jay Helms, founder of the W2 Capitalist, co-founder of W2 Cap Capital. Been investing since 2014, started with single family, migrated to small multifamily, migrated to larger multifamily, began participating as a general partner, then as a limited partner, and then later on as a joint venture. Also started doing private and hard money lending because of the need that was coming out of the W2 Capitalist community, which is the primary reason why W2 Cap Capital even exists. We have amazing members who are finding great deals, but didn't have access to private money, nor did they understand how to navigate hard money. And so along with Gwaith here, we founded W2 Cap Capital. Gwaith is an original member, one of the original members to join the W2 Capitalist community. co-founded New Wave Capital and responsible for acquisitions a lot in the multifamily space. Full transparency, I've invested in 3 deals as a limited partner where Quaith has been the general partner on those. And so here's the second thing. I've got to go through this. My attorney wants to make sure that this is a standard disclosure, right? And that we are talking about investing and there are risks associated with it. Nothing is guaranteed. Past performance doesn't indicate future success. All investments carry risk, and any investment you're considering, you should talk to a certified financial planner, of which that I'm not. I have a really great one I can recommend, but I am not one. All right, let's talk about next steps. Next steps, if you're interested to continue the conversation, let's just simply do that, right? Reach out. This is my cell phone number. This is Gway's cell phone number. You can give me a call or you can send me a text at 205-249-0248, or you can give Gwayth a call or a text at 516-238-4150. Or if you want to check out our landing page, you can go to w2capcapital.com. From there, you're going to see a tab that says lenders. Once you tap on that, you're going to see a form you can fill out, and then we'll reach out to have a conversation with you.